Hello fellow traders, I'm going to talk on this short video about nested sequences, how we can use sequences and the realignment for trading markets and call to trend markets. As you all know, the realignment and the sequence is the core rule of set and forget supply and demand rule set. The sequence says that you have to choose at least a 3 time frame combination. You can go as low as 2 time frames if you want, but you will be missing many more trades. But the idea is you will use a combination of 3 time frames, and you will establish a sequence of time frames. It doesn't matter. You can use the monthly, weekly, daily, the weekly, daily 4 hour, daily 4 hour, 1 hour, 3 months, monthly, and weekly sequences. You have to follow. You have to have a multiplier factor, a fractality to comply with the fractality of price, because price is fractal, and whatever patterns and sequences you see on one time frame, it will be seen on a time frame which is fractal to it. Okay, so the idea, this is nothing new, we have been doing that, but the idea is to sort of uh, put all these ideas together and try to combine it with nested sequences. We have nested levels of demand. We can have a daily area of demand nested within a monthly area of demand, nested within a weekly area of demand, and then if the monthly is in an uptrend, we buy nested daily areas of demand, or we wait for confirmation if there is no set and forget long in that uptrending sequence. But if you want to take counter trends, you can use a lower time series sequence. So we're gonna explain that. So it all depends, as I explained in this first bulleted point, that it all depends on your entry time frame and sequence. Your entry time frame and trend direction depends on the sequence of time frames you have decided to trade. You may be comfortable with an intraday type of sequence, daily or 4 hour or 1 hour or even 30 minutes, or maybe 1 hour, 4 hour, 1 hour, 50 minutes. It doesn't matter. You just have to be comfortable with what you are doing. You want to spend more time in front of the charts, use a lower time frame sequence and do scalping, intraday, and all that. You just don't have time because you are a full-time worker, and or you just don't want to spend too much time in front of the computer. You go to the bigger time frames. Because the lower they go, the more difficult to trade is, and the more losses you're going to have because the more trades you're going to have. And if you have a win-loss ratio, if you take more trades, you take more losses. That's pure mathematical computation, okay? And so the bigger you go, the less losses you are going to make, and the less psychological impact is going to put on you, okay? Then, if we are talking about nested sequences, I'm going to do some talking on this, and then we'll go straight away to the charts, okay? If we're talking about sequences, so if you decide to trade a sequence of 3 time frames, for example, a monthly, weekly, daily sequence, an invalid trade on your sequence, on sequence A, the one that you have decided to trade, may be a valid trade on sequence B, because you could have a nested sequence. You could have a weekly, daily, 4 hour sequence within a monthly, daily, weekly sequence, or even lower sequence. So you may be looking to short a weekly area of supply because that's your sequence, and then maybe you are not allowed to short because you are using the daily 4 hour, 1 hour sequence, and everything's uptrending, so you cannot take a short. You have to wait for confirmation. So it all depends on the framework, on the sequence that you have decided to trade. So if you look at somebody else's trades, don't think, oh, okay, I missed that one because I should have looked at that time frame. No, that's incorrect. You have decided to trade a sequence, and you have to follow the rules for that sequence. I mean, don't look at somebody else's charts or trades to try and ride those trades, because they will be against your sequence. So don't switch back and forth between sequences unless you know what you're doing. Okay? Yeah, that should be established on your trading plan. And this, what I'm talking here, could be something that can be added to the trading plan. I'll explain how. Okay, so a lower time frame sequence can be nested within a bigger time frame sequence, following the fractality of price. Okay, so we could have a weekly, daily, 4 hour nested within a monthly, weekly, daily sequence, or even a lower one. And the same way, we can have a daily demand area nested within a weekly area of demand, nested within a monthly area of demand. Price reaches the monthly area of demand and starts realigning with the monthly uptrend. So we have we had nested daily, weekly areas at that monthly area of demand to continue trading. The same way with the sequences. You will have a sequence. Once price reaches a monthly area of demand, we will have a sequence of weekly, daily, 4-hour downtrend and daily 4-hour, 1-hour downtrend. We hit a monthly area of demand with a monthly, weekly, daily sequence, and price will realign and break one time frame lower sequence, which is a weekly, daily, 4-hour. I mean, I'm talking too fast. I mean, I have all these concepts and understanding very well established and settled in my mind, but I'm sure that if you pause the video and really listen to me a few times, you will understand. And if you've been trading supply and demand imbalances according to the set and forget rules, it will click instantly. Okay, so this is nothing new. We've been doing, but you can look at the charts with different sequences in mind. Okay, then we can also use these nested sequences to trade content trend. We have been talking about this lately. I believe this is a good idea. Okay, it doesn't break any rule. We're just using a lower time frame sequence to try and ride a movement towards the area where we are looking to take the opposing trade, which is the trend trade. Okay, so we need some scenarios. Compression to the left, bullish engulfing patterns. We are taking control longs. We are looking for at least the weekly out of alignment if we are using the monthly, weekly, daily sequence and all that. We'll go through that. Okay, so we can drop down a fractal sequence to take counter trend trades. We can use a monthly, weekly, daily sequence, and you can drop the sequence down to the weekly, daily 4-hour sequence to take counter trend, or even lower. Okay. We talked about this. This was also mentioned by Kulmos, Robert, the post where I mentioned some ideas about this. It all makes sense, okay? And it will make sense when I explain this. So, having said all this, was a pretty long introduction, but I think it was needed to have these concepts explained and clarified before go to the charts. Okay, so this morning I had a session with one of the members. He needed some help, and we were analyzing this one. So while analyzing Cat Sweezy crosspair, it suddenly came to my mind this sequence thing that I had been thinking and all that. So I wanted to put it in words and also in a video because it's been very recent, just this morning, like 2 hours ago. So let's follow the rules and draw the imbalances here and the trend. So according to the rules, we have to connect the latest two peaks, one peak and one peak, and then we connect a trend line. Okay, maybe make it a little bit smaller, not that thick. That's the monthly. Okay, so we've got a monthly downtrend. We've got the trend line dashboard saying that it is a monthly downtrend. This is all-time low. Okay, zoom out. There's nothing to the left. I check other brokers like TradingView. There's nothing here to the left. So this is an all-time low, and as you can see, there is no close below these areas, which is tricky. So, but we're not talking about the closes and all that. That's something not in the rules yet. So this would be a tradable area if we don't take into account these closes. Okay, if you want to close, then you have to wait for confirmation. Okay, but that's not part of what we're going to discuss in this video. Okay, we are going to discuss the nested sequences. Okay, not odds enhancers, closes above, below, above lower zone, trading through a zone versus a close. It's not part of this video. Okay, so according to what we see here, we've got a brand new area of supply. Why? Because here there is nothing to be removed, and so levels of supply are automatically confirmed, validated as tradable because there is nothing here to the left to be removed. Okay, so we've got, now we don't know how high, how low we are in the curve. We are high in the curve, but the indicator doesn't show that. Okay, so I'll show you a trick later to try to come up with a percentage there, because we need an opposing area to measure the distance and the distance in pips. So we've got a downtrend. So since we will be using the monthly, weekly, daily combo trade sequence, then the monthly now is in control, very high in the curve. In order to have price ray tracing to the monthly area of supply, the daily has to be up and the weekly has to be up. I mean, it is impossible or almost impossible. There could be some exceptions that price reaches a monthly area, a valid area of supply, and the weekly is still down. Okay, that is very unlikely, but that could happen. I've seen a couple of exceptions. It has to be very fast movements, cases of the levels, strong pink candles and all that. But those are exceptions. So we have chosen to trade a monthly, weekly, daily sequence. So our bias should be short. There's no other way to go. Bias short. So you wait here for 1, 2.5 months, 2 months and 11 days for a trade. Okay, but you are waiting for that on other currencies as well. So you will have trades on the previous months. So the thing is, can we go long here? We don't know. Counter trend at all-time lows with those wicks? Probably yes. So we need at least the weekly out of alignment, while long, or a weekly uptrend. And once we are high in the curve with the previous fractal sequence, the one that we use for our trading, monthly, weekly, daily, then we are done. We are not allowed to take any more counter trend longs. But as long as price has not reached the time frame where we are expecting to resume our short bias on the monthly, weekly, daily sequence, we can take longs counter trend if we have the right scenarios to the left, compression, wow longs, trend, and all that on a weekly, on a one time frame lower sequence, as explained here. Okay, we can drop from the weekly, daily, monthly, weekly, daily to drop it down to this sequence, or even this sequence if you are trading these as the default one. Okay, so we've got a downtrend. There it is. So we go to the weekly and we connect the latest two peaks. So we've got start from the bottom and we go up. Okay, so we connect the trend line. So that trend line now is broken. Okay, and after the break of the trend line, we've got an area of demand that is a wow long with a bullish engulfing pattern that took out an opposing area. This is the lowest low in the charts. Okay, lowest low in the charts, this one. So this is the demand by itself because there's nothing else to the bottom. So this is the closest buyers as to price, and then it was retested here for one time. Okay, here rallied and then dropped again and removed it. But this is not here. This is a level of supply. Why? Because this trend line was broken and all that, and then we have this area of demand here broken that removed this area here, and also it is inherited because it removed the all-time lows. Okay, but this area has been taken out by this peak there. That looks like a CP, but it's a peak. Okay, so that area here has been removed. So this trend line was the valid one, previous valid one. This is a wow long at all-time lows. All-time lows, wow, say, or which has a counter trend, wow, obviously, says that we need, if we see a wow, we need to remove the opposing area. Otherwise, it is not a valid wow, because we don't want to take a risk having a wow counter trend without having one opposing area taken out. Otherwise, it would mean that it's not strong enough. We are not trending. We don't need our opposing area to be taken out when we are trending. We need just the imbalance. Okay, you can also wait for the removal if it's advisable. Okay, but you don't really need it. So here we were trading. We remember trading a monthly, weekly, daily sequence. Okay, so we want to go short. Where? Okay, so we want to go short here now because the weekly is our alignment. But now we've got, not only do we have a weekly wow long now we have a weekly uptrend. Why? Because rules say that if we've got two valleys and one opposing zone of supply out, we can connect a trend line and we've got an uptrend. So now we've got an uptrend here. Okay, so how can we use the nested sequence? By dropping down a fractal sequence from the one that we are using monthly, weekly, daily sequence, we can drop it down to weekly, daily, 4-hour sequence, or even weekly, daily with 2 time frames. Okay, so but we need at least we need the weekly out of alignment. So we need this out of the way. Okay, if we have a weekly uptrend, then better. But when we have a weekly uptrend, in this scenario, for example, once we have a weekly uptrend, we could have a pre-CP long on the way up, but very close to the opposing area we are looking to short. Okay, so we don't have much profit margin really. So we can use the weekly out of alignment, or even daily, weekly, daily 4-hour, 1-hour sequence. Okay, so we've got an uptrend there. This is removed. We've got a nested sequence now. We've got an uptrend. If we go to the daily, okay, we've got this trend line like that. Okay, if this is a tricky one, so we will use like that. So CP. Okay, so no matter what, this is the all-time lows. This is demand. Okay, this one over here, over there. This is demand. Right? You can draw it a little wider if you want. Okay, or even like that. So this is demand because it removes the CP. Okay, so even if you have drawn the level like that, I do draw that like that trend sometimes on my charts, and you pointed out that I did it wrong and all that because I have to trick my EA. Okay, I recently had a conversation with one of you about this, but I have to trick my EA, and then I say, okay, I want this out of the way. This is 2-to-1 here, but this is not removed, so I tell my EA I want a 3-to-1 minimum to calculate the removal of this zone, so it can take this trade. Okay, so sometimes I have to do that. I'm sorry for that, but I have to do all kind of tricks to have my automating most of my processes, my trades. Okay, so trend line broken, wow long. Okay, so if we go to the weekly chart, we know this is weekly supply. Okay, and now when we go to the daily, we see that this is the weekly supply and I was taken out. Okay, so this is the origin of the whole move up. This is the wow, and this is counter trend trade using the weekly, daily, 4-hour sequence. Okay, so once we get the weekly uptrend here, and we remove that area, we can take pre-CP longs. Remember, but there is not too much profit margin. Okay, so 20 EMA retested, second retest. So after several retests, we break the resistance and supply on lower time frames, and when we can take. This is the area of supply. Okay, and this is the CP, pre-CP. Okay, it's still holding. Oh, there. So we've got now an uptrend. Okay, so now with the daily uptrend, okay, now we made a higher high there, another peak and all that. With the daily uptrend, we can also, if we are trading intraday, if you want, I'm not doing that, okay, you can switch, drop it down to a lower fractal sequence, which is daily 4-hour, 1-hour. So you can take the daily now, it's up. Once we make a higher high here, the daily is up, so you can switch it to the 4-hour, and then you can take trades like this. Okay, so that's the way it works. Okay, so you can start switching from one time frame sequence to another one and decide when you can counter trend. Here in this scenario, it's good because we had DCP that took out these areas over here, tested once, tested twice, removed. So we have a lot of room to rally. This is a CP against the trend, not nested, so it's not a good idea. It goes against the rules. So we have room from here to at least here or even there. Okay, so we have like 3-4-to-1 ratio if we're trading, or even more if we're trading the 4-hour. Okay, so still room for that. Or would have taken this one if price would have retraced that one. Price rallies here, and then we can take. This is based on the weekly. The weekly trend line would be something like that, okay, and the daily trend line something like that. So we can take, use the drop down the sequence to weekly, daily, 4-hour realignment sequence, and use that in order to trade counter trend. Okay, so Let's finalize this by using another example here on this same chart, because we are talking about the monthly, weekly, and daily time frames, but we could also use a bigger sequence. So we've got let's take a look at this, okay? This is a very strong imbalance, isn't it? I mean, this is the strongest imbalance in the chart. Followed, the second strongest one is this one, okay? Those are the strongest imbalance. So this is, you say, okay, but now you are trading the monthly sequence, okay? This is a weekly. This is a monthly area, okay? A supply. It was the one that caused the break of all-time lows. So what happens now? If we are trading the monthly, weekly, daily sequence, then we cannot short at the biggest imbalance on the chart. And it looks great. So, okay? Looks great to short there. But if you are using the monthly, weekly, daily, by the time this is taken out, okay, we will have monthly out of alignment. And you cannot take any short unless you wait for confirmation. Okay? So that's the power of this monthly, weekly, daily sequence. But you couldn't be able to take that. You will be able probably to take long all the way up there once the 20 EMA is out of the way after a couple of retests. Okay, so right now we have like a short there, nested short. If you don't consider the close, okay, if you want a level to be confirmed with a close, candle close, then you have to wait for confirmation. Okay, otherwise a short confluence with 20 EMA on a monthly trail line and all that. But coming back to the sequence. If we want to trade that based on a monthly, weekly, daily sequence, this is negated. Why? Because the monthly area of supply will be broken. We would probably have two values probably after some months or not. We don't know, but one area of demand supply is thinking out, so consolidation. Wait for confirmation there. But what if we are using a different sequence? If we are using a weekly, daily sequence for hour, we can go higher, trade longs. That's perfect. But we want to short there. Is there a sequence where we can short at this big imbalance? Let's see. If we are using the monthly, weekly, daily, then we have to go one time frame higher on the sequence, which is the 3 months. So now we have 3 months, weekly, daily. So let's see if in this area we have a 3 months area of supply. So we use the indicator that Marcus has kindly created for us and shared with us even before he became a member of the community, a lifetime member. Okay, that's the option in the community now to become a lifetime member. So he used that one. So he created that one and shared it through James, and we've been using that indicator, which is great, before he joined, which is great. Or it says a lot about him. So thanks a lot, Marcus, for sharing such a great tool. And this allows, I haven't configured it correctly because he's using another indicator for the 50% candles and all that, so it won't draw the dots very well on the 3 months, but you will see. So in order to see the 3 months, you need to go to the monthly, because the 3 month chart is not natively available on MetaTrader, so you have to generate these candles on the 3 months, 6 months, and 1 year by extending the monthly candles and making rectangles. Okay, so it's a trick that he used, a very smart trick, by the way. 3 months. So this is the 3 months. We can see that this is a peak and this is another peak. Okay, so we use a trend line to connect the latest two peaks, and voila, we've got a brand new area of 3 months supply that remove all-time lows. So we've got a automatically validated level of supply. By the time price reaches that area, if it is here now, there is something he needs to fix. The candle should be here. So price will not break the trend line unless it spends months and months here and the trend line is broken. Okay, so if it continues like that, the normal process, like something like this or like this, then price will retrace there. And according to the 3 months monthly and weekly sequence, we can take weekly supply areas or even daily to drill down the risk a little bit. Daily areas nested within the weekly, monthly, and the 3 months. Because why? The 3 months sequence is the biggest time frame in the sequence, and it tells us to go short. Okay, the monthly is the intermediate sequence, okay, and it will be up or out of alignment. So we cannot take trades on the monthly, but we are allowed to take here. And that is a monthly area of demand within the 3 months area supply, with a 3 months area supply. So price could start rallying on the 3 months here, breaking areas of supply on the monthly, and then realign again with the 3 months chart and downtrend. That's the sequence, the realignment. That's the power of the sequence, and that's the power of the fractal sequences. You drop down a fractal sequence, or you add up a fractal sequence. Okay. Now let's go. I don't know how to say that in English, but in Spanish it's like rizar el rizo. It's making it a little bit more complex, like adding one, not complex, one more layer. Okay. It's like in circus. Okay, you say, well, let's do it even more difficult, but this is not difficult really. We are adding one layer more, nothing else. So this is 3 months. Okay. So we go, now let's go to the 6 months. Okay, we've got, draw the latest peak, previous peak, and we go here. So by the time price reaches that area, we will be in a downtrend on the 3 months, 6 months, sorry. That would have made a lower low and confirmed by removing the all-time lows. So we can trade longs, shorts up there at 84.50. So here, this area that we've got up there on the monthly, okay, this area here is an area that is nested, okay, nested within 6 months supply zone, 3 months, and 3 months supply with 6 and 3 months downtrend. This here, over here. So even though we have the monthly out of alignment, when price breaks this area over here, we will be able to trade that area short, set and forget. Why? Because that area is nested within a 3 months area of supply with a 3 months downtrend and a 6 months area of supply, which is proximal line here, with a 6 months downtrend. Okay? If you are not taking a look at these time frames and this sequence, then you are forced to take a confirmation type of trade. That is, wow short on your entry time frame, minimum the daily on these bigger peak time frames, or a brand new area of supply that removes an opposing area. That's a second confirmation type of trade. So that's the way the realignment and sequence works, and how we can use nested and fractal sequence in order to make a movement or take a trade against the trend, expecting price will reach the opposing area and from there continue shorting. So here on the 3 months here, we have a weekly area supply very strong, and then if we drill it down, we'll press V for vertical line, for the indicator that we have the shortcuts, A for disable the auto scroll, and then move the rectangle, and I press 3 for time frame on the daily, and we've got the greatest imbalance ever on this chart. So that's a short. This short on the daily is nested within a 3 months supply zone, 6 months supply zone, okay, weekly supply zone, and monthly supply zone. This is the power of nested imbalances within nested sequences. Okay, the same happens with pre-CPs. Okay, so I'll create a video about that, and you will see what I mean as well. And this is what I wanted to explain on this video. I believe this will help you understand much more how I came up with these ideas about why we have to wait for another level, for a higher level of bigger time frame in order to short or to go long. And now with these counter trend fractal sequences, we can use a lower time frame sequence to validate a counter trend trade, whereas before we didn't even take it. But remember, we need to have, this is very important. I will not get tired. I will not get exhausted repeating this over and over and over. Okay, so we have to have the right price action to the left here. Remember, taken out, used up. Okay, so now take longs. Okay, this is taken out, so take a long here. Weekly bullish engulfing pattern, all-time lows, weekly wall long that remove this opposing area on the weekly, blah blah blah. Then yes, okay. Otherwise, no. So this doesn't mean you are going to be able to take all the fractal sequences, lower fractal sequences to take control trend. Otherwise, I don't want to see you now taking control trends over and over and over all the time. No. I mean, if you do that, you're going to blow up your account for sure. Okay, so you need to, each scenario is completely different. If you see that the scenario is complex, tricky, you doubt, forget about it, ignore it, lean on something else, analyze another pair, go to the beach or go to the snow, whatever you have in your area. Okay, make love to your wife, to your husband, anything, but trying to chase a trade on a time frame, on a scenario, tricky scenario. Forget about it. Remember, rules can't and will never explain all scenarios. If there's a scenario is tricky and you think that the rules cannot explain it, it's probably that the rules cannot explain that scenario. So ignore it and lean on clear scenarios with trending markets, and that's all. I mean, if you try to do the opposite, you're going to have a lot of problems. Okay, and you will reach a dead end, and you will overanalyze the markets. You will have market analysis paralysis, and you will start losing faith in what you're doing and all that. This is like, I don't know. Imagine that you are doing a test exam with those checkboxes. Okay, you have like A, B, C, and D. Okay, and you've got 50 questions. I did one recently for my sale title. Okay, now I'm a captain. Well, a lower title, but I can sail. I'm allowed to pilot a sailboat. So you get a list with like 70 questions. So let's do this. You start with the question number one. Oh yeah, I know the answer. You tick the box. Okay. Second one. You tick the box. And now you reach the third one. And the third one is a very tricky question, and they normally do that. Okay, they normally want to catch you. They set some traps so you fail, and then you have to pay for another fee to pay another exam. Okay, that's how they do it. Also, they want to test how smart your mind is as well. Sometimes here in Spain, it's very typical just to get your money with another exam. So the thing is, you reach number three, which is a very tricky question. Okay, out of there are two possible answers, correct answer, of three out of the four. Okay, so you've got A, B, C, and D, and B and D are valid. So you are valid. Okay, and even three, okay, could be valid. A, obviously, no. So what do you do when you come up with that scenario? What I do personally, and what you probably will do in real life, something that you don't do in trading, is this. You've got a limited time. You've got like 1 hour to complete 70 questions, and then to extend maybe on this sailing title, you had like 2 hours, where one of them was devoted to calculating the route and for the current with the wind, where you have to, well, the magnetic field, how you can use the compass, blah blah blah, the currents, the wind, and all that. 1 hour for that, 1 hour for the questions. So you have to be very, very smart to do that, to manage your time. So, and you do that, obviously. You will have done that in school. So you reach a tricky scenario, what do? If you have like 70 questions or 50, so you reach the number third, tricky, out. And you maybe place some signal, and you go back at the end of the exam when you know that you just have 10 minutes to go through and review the ones that you think are tricky. What do you do? Or will you focus on this one 1 minute, 5 minutes, 10 minutes, 15 minutes, because you want to have it right. You want to have it right. You want to have it right. But guys, it is impossible. I mean, if you are finding trouble to find an answer to this question because both B, C, and D are good to you, maybe you didn't study too much and all that, well, all three are valid. One of them, one may be more valid than the other one, which will be the right answer. But this is a tricky one. What do you do? This is the third question. Ignore it. Go to the fourth. The fourth, okay, that one I know. You tick it, tick it, tick it, check the box, check the box. And then you reach number 12. Oops, that one is tricky. Ignore it. Go to the next one. Go to the next one. And then at the end of the 50 questions, then you may have like 3 that were very tricky, but you can fail like 10, and you will pass the exam. Okay, you will pass the exam if you have like 10 mistakes, 10 errors. So why? Can you tell me why do you focus on the tricky scenarios? If you know, in trading, for example, it has happened recently in the community. In trading, you will have clear scenarios and unclear and trickier scenarios. So if you reach a trickier scenario, ignore it. Don't spend time on it because it's gonna drain your energy. It will make you feel unconfident, lose confidence on the rules. Emotion. You will start to feel emotional. You will reach a point where you will have analysis paralysis. You will make auto-sabotage. You will try to make sense out of everything. And that would be like reaching question number 3 with 4 checkboxes to check. And you stay on that question for the whole hour that you have for the exam. The same thing. You can compare that to that. Okay? That scenario. So in trading, you have like 50 pairs. You're analyzing the pairs, and maybe 5 or 6 are tricky. What's wrong by ignoring them? Can you tell me? What's wrong with that? Ignore them as you would ignore the tricky questions in an exam. You are going to pass the exam after all. If you are allowed to have 10 mistakes out of 50 or out of 60, no problem. I ignore that one. I won't even consider them I won't even think about it. So same in trading, you've got 50 pairs. 10 of them are tricky, ranging. You don't know how to clearly draw a trend line or a level. It is a nested level. It is not. As it be removed, where there are 2 levels, 1 level. Forget about it. None. Ignore it. Wait for the opposing areas, clear areas, valleys and peaks, resistance, support, whatever you want to call it, to be removed, clearly removed, and then something will be changing and will be much clearer. But if not, forget about it. That's the biggest recommendation I can give to you. Because if you don't do that, if you do like going to an exam and focus on the questions that you don't really know, the ones that you feel bad about it, you didn't study well, or you see 3 correct answers, ignore them. Because at the end of the road, if you are trading, you're taking 10 trades a month or 20 trades a month, you know that you're going to fail 40 or 50% of them. You're going to make mistakes. That's part of the game. But if you ignore the tricky scenarios, you're going to have less losses, and you will have your analysis done pretty fast. Okay. Well, this small video took longer, and I was going to cover only these nested sequences, but in the end, I had to talk about psychology as well a little bit, because recently there were some posts and on the community that I think that this video will help these traders to. They know that this is the way it is in real life. So, but sometimes when we trade, since we are alone, we are our own employees and employees, we are our own bosses, we take the risk. Nobody tells us what to do or what not to do. It's very, very complex. So when you reach complex situations and scenarios, simply ignore them. Okay, ignore them. Rules can't explain all of it. Can't. Okay. Have a great weekend, and hopefully you will understand the nested sequence much better. Bye bye.